Hello traders and welcome to another video review. Today is Thursday, February 16th, 2023. Let's find out what is going on the Forex calendar. What do we have here? Here is, as you can see, a set of very important data released. Some of them had been released overnight, as for example the employment change data from Australia. The previous reading was minus 14,000. This time is minus 11,000, which is way worse than expected of 20,000 in plus. Building permits and Philadelphia Fed manufacturing index together with the PPI and initial jobless claims. All of this data are scheduled for release at 2:30. Those data are from the US, of course, and the situation here changes according to every data release. Initial jobless claims should increase to 4,000 to 200,000 claims. PPI should increase from minus 0.4 to 0.4. Philadelphia Fed manufacturing index should go from minus 8.9 to minus 7.9. A little bit of an increase, and building permits should increase to 1,350,000. So set of the very important data from the US economy today is scheduled for release today at 2:30. Now let's find out what's going on charts, and we are going to start with US dollar and Japanese yen. For our chart of the US dollar to the Japanese yen is showing us another wave to the downside, completed at the level of 128.8, and then a strong bounce to 132.90, pullback that ended with a pin bar at 129.81, and since then we have a new local high. 134.37 was made around 16 hours ago, so let's just mark it as our intraday technical resistance. There is another very important level, which is of course the high from 6th of the February. As you can see, it was tested as well on the 13th of the February, then violated. So 132.90 will be our important technical support. What else do we have here? We have a tweezer top. According to the algorithm, we have a tweezer top here located just at the highs of 134.37. Right now we are in the pullback mode. The market is coming off extremely overbought market conditions. Nevertheless, the momentum is still solid. The momentum is still positive. If we put kind of a parallel channel here, for example, if we put like a parallel channel on the momentum, you can clearly see that the momentum is moving inside of this channel as well. You can see it here, for example. There you go. We are moving inside of the channel, positive channel, strong channel on the momentum. We are moving inside of the channel, making local highs on the US dollar to Japanese yen for our chart as well. So it looks like there is still a room for the US dollar to Japanese yen to move higher. When we take a look at the potential target levels for the market, we can use the Fibonacci levels, of course. And let me just take a look. There you go. This is magnet off. This is 1-to-1 level around 134.64. There is that situation where our current development might be ABC, for example. For now it's let's say it's LBC. ABC to the upside will be 1-to-1, so we are almost there. For the equal legs, wave A will be equal to the wave C if measured for the low of the wave B. So that's the level, 134.64, very important level for the US dollar to Japanese yen. So the other data were from Australia. So let's take a look at the Australian dollar. Let's say AUD, and USD, of course, and Australian dollar versus the US dollar, where the situation here is kind of a different on the 4-hour chart. Why? The first thing is that we got some kind of a support here. This support was made at 6,873 on the January this year. This is the support level that's been recognized plenty of times, as you can see here. Even here was a bounce. Now we tested it twice already. The local lows, nevertheless, were made a little bit lower on the level of 6,857. So we have this very narrow range, very narrow support range, or the demand zone, you can even call it, on the Australian dollar market. Nevertheless, as you can see, we can't move past the level of 7,011. This is the level of a technical resistance. Local high was made at 7,027, so it's only like a 16 pips higher. Nevertheless, it's still below 100 periods moving average, so there is no valid breakout above this level. When the market traded around 50 periods moving average and tried to break above this level, we had this kind of a bearish engulfing pattern on the 4-hour chart. As you can see, we tried to rally, and then all of the rally was moved lower, and then it followed to the almost to the level of a technical support, because the local low was made at 6,868 pips. Now the market is trying to bounce. Nevertheless, this bounce is still inside of the negative territory, inside of the negative zone, and it's not above the level of 50. So we should expect another leg to the downside on the Australian dollar soon. Let's now take a look at Bitcoin, because Bitcoin is rallying very, very strongly. We got our technical resistance, of course, as you remember, 24,258, and we got our other very important, let me just switch to the daily, but it will be easier. There you go, daily time frame chart. We got other very important level. This is the high from the last year, August, as you can see here. Okay, that's the low from the 2022. Yeah, this is the low from 2022. That's from the November, but this is the high of this kind of a corrective cycle to the upside. So in order to rally higher, Bitcoin needs to break above this level, and it looks like the Bitcoin is on its way to move very, very strongly higher. How much we traveled already, how much we made since the lows, let's say here on the 21st of the November. Let's say we are going to take into the account the lows of the 13th of the December last year. Towards the recent highs is 52%. So the 52% rally is from the almost last day of the last year, 2022, but the recent rally is, as you can see, 16%. 16% up we are on the Bitcoin, and that's a very, very important rally, I guess. We are still trending higher, of course. In terms of the Elliott wave, we have impulsive wave here. We got wave 1 here. We have completed, let's say, wave 1 here, wave 1 around here. Then we got the wave, possibly the wave 2, or the wave 2 is somewhere here. Nevertheless, it's completed now. The wave 4 had been done, and we are doing wave 5, the last wave to the upside. Of course, the target is located above this two and technical resistance levels, because the targets are made using the Fibonacci projections. So if we want to see where is the target for the wave 5, well, let's do it at the end of our session. Fibonacci expansion, it will be the length of the wave 1 to 3 and measured from the bottom of the wave 4. So this is the bottom of the wave 4. So where is the most popular target? The most popular target in that situation is the 0.61, and 0.61 is located at the level of 26,861. And in the case of the extension to the upside, the other target is way higher on the level of 30,163 dollars. Do we have any kind of measurement that could give us kind of a Fibonacci cluster? Let's say we have something like this. So where is our level? The other level is 161, so that's the zone. 26,162, and maybe, well, there you go, that's the most popular zone here for the euro dollar in terms of the Fibonacci projection. So we got these levels. The blue ones are technical resistance, the black ones are Fibonacci targets. We got very nice zone for the wave 5, so maybe wave 5 will end up somewhere here, between those two levels. And if there will be an extension of the fifth wave, then of course we are targeting over $30,000 for the Bitcoin. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.